Hi, folks. Last show of 2021, right?
Yeah. 21.
So we're going to wrap up the year and kind of give you our predictions right after this. Well, that was quick.
I like it. Okay. To the point. I like it.
I like that one. So thank you so much for joining us on the Real Estate Investor Show. We are Carolina Capital Management. We are lenders in the Southeast for real estate investors. If you're interested in borrowing money, sorry.
It's getting serious now. You got the glasses going
and
off.
take the glasses off. Then go to carolinahardmoney.com and click on the Apply Now tab. If you're a passive investor looking for passive returns, then click on the Accredited Investor tab. Don't forget to like, share, subscribe, hit the bell, and sign up with Wednesdays with Wendy. So every Wednesday, Wendy shows up to
shows right up
give
for Wednesday.
any advice or talk to anyone who cares to learn something about real estate. So in the chat side over there, you'll see a link to her Calendly link, and go ahead and sign up because she's typically a couple of months in advance already booked.
Yep.
There's the link right there as well. And with that, there is a chat, like I said. So if you have any questions during the show, don't forget to talk to us. Ask us a question.
You look like you're
Maybe
off the screen
we'll
there, bro.
answer it. I am.
Come join us.
No. There's a new outbreak.
There is a new outbreak, but it's just a sinus infection for me. I'm good.
So I got to show you guys something since we're stepping up our game a little bit. We have other camera angles.
Whoa.
Woohoo.
And we moved into a new studio.
Wow, we look professional.
So how do you like that?
That's incredible.
Pretty sweet.
Yeah.
So you won't be bored just looking at this camera angle.
Well, I have to tell you what just happened.
Okay.
Did you tell everybody what happened?
So,
why I'm late. Anyway, so our parents are 84, and thank God we still have them. They had a doctor's appointment this morning, and my dad thought he locked his keys in the car because he pressed the button and shut the door, heard it go click, click, and then went, oh man, I forgot my keys. They were in a hurry. They walked into the doctor's office. And so I called my mom just to check her, see how things were going. She said, your father locked his keys in the car and he got lost on the way. And then I hear the history of the world.
Not to mention there's a bowl game about 4 blocks away from where they were going.
So it's just been very hectic for them. So I went up to meet them at the doctor's office, and I was going to bring them back home, let them get their spare key, and have them drive back. So I get there. I said, Dad, I can't understand that your car will allow you to lock your keys in the car. My car won't let me do that. If your fob is in there, well, what's a fob? It's the thing that makes you go, it's the clicker for your car. Oh yeah, that's right. He said, well, I locked it with the door handle when I shut the door. I said, well, did you test it to make sure that it was locked? And he said, no, I didn't have time to do that. So I walked over to his car and opened it up. It was never locked the whole time.
So he had an unlocked car with his keys sitting inside of the ignition.
And his cell phone was sitting right on the console too.
Man, like it's still all there.
It was. Too
not
funny.
Necessarily to break the window here.
So I got to drive into Charlotte real quick and
fight some traffic.
Oh yeah, that was
good.
fun.
Well,
that was fun.
We're glad you made it. So let's do a quick rundown of what happened this year in general real estate, mainly single family.
Prices up, inventory down.
Yeah, there you go.
So different segments of the market right now, but it's up all over the country.
And it's
But-
still doing well, which is amazing for me. Even during, November and December,
Mm-hmm.
I'm talking to real estate agents. Our loans are still going crazy.
Mm-hmm.
We're still seeing, and prices are still up there. Nothing's dropped. Prices are still very consistent. They might be sitting on the market for, I don't know, a day or two longer, but not much. And it's amazing that it's still remaining so steady, even through a time that normally things tend to die
You
down.
used to have a big slowdown
Yeah.
in November, December, January.
Yeah. Now
Mhm.
that's when I say I'm seeing that in the Southeast. That's where we do most of our single family loans. What are you seeing apartment wise and self-storage wise?
It's going nuts. Self-storage is huge right now. Apartments, same thing. It's really big. Whether it's new construction, which is more where it's at right now on the new construction side. But the existing structures, the cap rates they're trading for right now it's insane. I was looking at one that was trading at just below a 4 cap. It was like 3.9 something.
Well, that's like not even a deal.
I was like, wow, that's amazing.
For those who aren't aware, that just means that for the amount of money you're putting in, you're only making 4% on your
return.
on your
Wow.
Yeah.
Wow.
Yeah.
That is REIT type of
Real estate
investment trust type of returns.
Even they haven't gone that low. I mean, I guess they will now. But
Yeah. Yeah, it's
Yeah.
kind of crazy.
yeah.
So the single family housing, the Tampa St. Pete market
Oh, that's
and
huge.
Miami, they're up in the 25% range year over year.
So what do you think it is? What is it about
A
that
lot of
Tampa
people
area?
moving to there, and there's not a lot of inventory.
Right.
Well, I mean, politics aside, I think a lot of people are moving to Florida because there's more
Businesses open.
businesses open, more opportunities right now because of the governor's stance on COVID.
Right.
So there's a lot of movement and migration that way.
Yeah,
And-
I've noticed that the
Not to
COVID
mention-
friendly states are doing really well.
Not to mention
COVID
there's no
friendly.
income tax in Florida.
And there's
Yeah.
no income tax in
Yeah, that
Florida.
helps.
Now, it doesn't mean there's not tax in Florida. People have to understand this.
Well, if you do it right, there's no tax anyway.
It's, there's property tax, there's sales tax. I mean, they make up for it. They're just not charging you
That's right.
tax against your income.
That's
And to clarify my comment, it is not evading tax. It is using the system to have smart tax.
That's right. Using
well-
all the guidelines properly.
We covered this. Every country has about a 20-page booklet on their taxes, and the United States has a 2,000-page addendum to how to get around it.
Yeah.
None of the others do that.
Yeah. But so everything that we're seeing, I mean, obviously fix and flips are down just because inventory is more difficult to find. I would say that if I'm seeing any properties sitting on the market for any period of time, they're in that 750 to 3 million range.
Mm.
And even the set, and honestly, it's really just the million and up that are having any kind of period of time on the market. I mean, I was looking at one the other day. It was like 800 some thousand in Spartanburg, and it was on the market 4 days.
Oh, wow.
In Spartanburg,
In Spartanburg.
okay,
Yeah.
that's kind of unusual.
Yeah, that's a small town very close to us.
Mm.
And
Just
the
in case.
vast majority, I would say the median price point in Spartanburg is more like the 146, 150, and then about median.
Yeah.
Maybe. Yeah.
So, given all that, what we've said, we've seen this year. So, what are we thinking is going to happen? I mean, what's coming down the pike? Are we going to see changes?
Yeah. We're going to see changes.
So, what do you think they're going to be, though? Who knows, really?
Well, I mean, so who's going to be the big winner? Everyone wants to know what's the big winner in 2022. I mean, for the lending side, I think the big winner is going to continue to be rentals, single family rentals. People are still converting, as more lenders get into doing portfolios, working around the the appraisal issues that we've been having, there's going to be a lot more lending on single family rentals. From the investor side, I mean, with all this migration going on, people, I mean, moving here, there, because businesses are allowing it. I think storage units,
Wendy's leaving us.
storage units are the really big winner in 2022. And they've been kind of, building up in momentum or in popularity, but they've always been a great asset to invest in. So I think storage units for sure. Multifamily, I think, is going to cool off. I mean, we have a lot of new construction going on that will be finished up in 2022, 2023. So I think that'll start cooling off. But multifamily was the big winner in 2021.
Yeah. Well, I mean, you still have inventory issues with the single family. People still have to live somewhere.
Mm-hmm.
So multifamily tends to be much more secular than other properties, because what'll end up happening is you'll get a shortage, and then you'll have tons of people building them out.
Yeah.
And then they get oversaturated because they don't know when to stop. They're all trying to get in on it before it closes on them.
Yeah.
And then you have oversaturation and nobody builds anything.
Yeah. I mean, you saw between, what was it, like 2010 and 2018, the number of multifamily starts.
Yeah.
I mean, and then just between 2018 and now, it's just blown that completely out of the water.
Yeah. There's still opportunity in existing multifamily that needs to be upgraded.
Yeah. I mean, that C and B level asset in a B location, even a C location, C plus, is a great asset to be in, because you can't build them anymore. You can't, and the rents are still strong enough to carry them through. So it's a great asset to be in.
Right.
Oh, wow. Stepped out from water. I appreciate it.
You're going to have inventory come back to the market with, and it's going to be a combination of things. Those folks that were going through forbearance, the ones that can't afford to keep them anymore.
Mm-hmm.
Wonder how that's going to affect the
That
market.
are moving out of those areas, there's going to be houses there that are going to be available as well. I don't think there's going to be a lot fewer forbearance people that are going to be in trouble, because there's still way too much equity in these properties. Most of these people, they may not be able to afford to make up the payments and stay in them, but they can certainly sell them and not be underwater.
Yeah. I was having a conversation with a member of Collective Genius, and he's also a business partner of ours, but he was asking, what I thought, what asset class had the biggest risk of falling into foreclosure in 2022. And, after we kind of just brainstormed a little bit, I came to the asset class between 350 and 800,000.
Yeah.
That is the one that stands the most risk for going into foreclosure, because those are the people who are making between 100 and 200,000 in jobs that probably could go either way, depending on factors in the market. People who are in the million plus homes typically aren't going to lose income based off market factors.
Right.
Now, that's not true across the board, but that's pretty typical. And then under that 350, you're in the affordable housing. Again, you're in, workforce housing, blue collar housing. Those people typically won't lose too much.
Well, the other thing too, in that price range, are a multitude of people that have started their own businesses over the past year and a half to 2 years. And we know how hard it is to run your own business. My goodness, it's incredibly difficult. It has its great benefits, but boy, is it difficult.
Not for me. I let other people do it.
We do now. Thanks, Jonathan. But it's just amazing to me how many people, I believe, are going to realize how difficult it is and see that they don't really have the success they were hoping for, that will have to shut down their businesses, that will now be out of work. I think we're going to see a lot of that.
And just to go into the I guess the psychological side of it, when you start your own business, a lot of people want to look successful before they become successful.
Right.
And having that next level home in that 350 to 800 range is usually one of those things, besides a car that's ridiculously priced. So,
Sorry, guys.
bit of advice: if you do start a business, let it be successful before you start trying to look successful.
Well,
Yeah.
all cars are ridiculous right now.
yeah, you'll get more. You'll get more than you paid for it 3 years ago, but you can't get one.
Well,
That's right.
it's funny. I was just shopping around because my HVAC stopped working.
So you shopped around for a car?
Yeah. I also have 103,000 miles on my car.
Do you mean your air conditioning in your car, not your HVAC?
Yeah,
in your house?
HVAC in my car.
Okay. Gotcha.
Okay, in his car. Okay. That was a real rabbit hole you went down.
The climate control in my car. was
Okay,
not
that
working,
keeps us on track.
right?
Thank you.
So, and I have 103,000 miles on it. So I was thinking about trading it in. I went online to one of the places. They only want to give me $7,900 for my car. And then I went on their site and they had the exact same car with the same miles for sale for $16,900.
Wow. Man, yeah,
You're not talking about your truck, are you?
No,
No,
talking about my car.
Okay.
I just said my car.
Because I'll take that. I'll give you $79.50.
Yeah, my truck is worth more than the car.
Yeah.
But I'm not paying $40,000 for a new truck, and that's
Yeah.
on the cheap end.
that's really cheap.
So if you need a car, good luck.
Yeah.
If you don't need a car, I would not upgrade for a while, by the way.
To get it back to real estate, though, thanks, Bill, for that.
And thank you, Peter and Janice.
One of the other big winners I think that's going to emerge in 2022 and 2023 is office space, office condos. Because right, like Wendy said, there's a lot of people starting businesses. Not all of them will fail.
Mhm.
And one of the biggest assets to small business is people being in the space together to collaborate. You can't really get that on Zoom
That's
to
right.
to create that, have that creation. So I think office space will be a great winner in 2022, 2023. In fact, we're actually underwriting some office space in Charlotte right now.
Awesome.
Mm-mm.
Awesome. And I think COVID has really helped us learn that because, I mean, even for us, we've been in business a long time now.
Mhm.
For us, when the three of us, we collaborate weekly and we have to, even though we're in the office together and we talk every day, it's so important for us to, take that 1 hour
Mhm.
every week and talk about new ideas and, what's been happening in the past. Just all the things that are going on,
Yeah.
how we need to roadmap. And we put that on top of our monthly financial meetings that we do. It's really important that we're together and on the same page. And
Yeah.
If-
Well, and also, to build on that, it's the spontaneity of things. Like, Bill will walk in my office and say something, and
we'll say, get out.
we'll say, get out. I'm like, wait, hold on. That gave me an idea. Come back in here.
That actually had merit. Come
Yeah.
on back in here and let's discuss it a little
That's
bit.
right. That's
So-
right.
So yeah, my opinion, our opinion, office space, rental loans, and also like light industrial, which light industrial and storage have been doing well in 2021. So they will continue to do so. David Smith, I definitely need help this year with my income.
With my income taxes, 2 in Rhode Island, 5 in Maine, selling 1 in Maine, contract for deed. Can you recommend a good real estate accountant?
So we don't have
Yes.
any. Well, I don't have anyone local here, but
I
who
do.
would you?
Key Shin.
Well, he's talking about Rhode Island and Maine. I mean,
He can do taxes all over.
Doesn't matter.
Okay.
Yeah.
Doesn't matter where it
the
is.
property
Okay.
are. Yeah.
His name is Key Shin, and I forget the name of his company.
Smith and
Smith and Shin,
Smith and
LLP
Shin,
or
and
whatever.
it's Smith and they're out of
Oh,
Greenville.
he said RH is Rock Hill.
Yeah.
Okay. Yeah. Keishan, he's out of Greenville. He does some of my taxes, so he's a great guy.
Yeah. If you'll email us, we'll be happy to give you his digits so you can talk to him. He's a great guy.
So, and then Peter says, if and when the market ever takes a downturn, do you think the affordable single-family home prices will go down enough that investors should wait?
No.
Well,
It's not going down.
So
prices aren't going down. The rate of appreciation is going to slow.
the rate of inflation, or not inflation, appreciation is going to slow.
Yeah.
However, yes, eventually the market will take a correction. I don't think that it's going to be anytime soon, which would warrant you to sit on dry powder and wait. It's
Unemployed Benjamins, is that what we
Yeah.
call them?
Yeah, unemployed Benjamins. Yeah, don't do that. So there are still good deals out there. As these aggregators start pushing harder and harder into the rental space, prices aren't going to go down for quite some time.
Yeah.
And
I don't see prices going down unless there's something catastrophic that happens. It's
Well, I mean-
just the rate of appreciation will slow.
yeah, I mean,
We
at some point, so rate of appreciation slows, but at some point, the interest rates will warrant, they'll have to reach a certain point where you have to have a decrease in value. There has to be that decrease, or they don't raise the rates.
Rates are going to go up 3 times next year.
And then they're going to go down.
Are you the amazing Kresge?
No, the Fed said they're going to do 3 rate hikes. next
And
year.
then one to bring it right back down where it was,
Yeah.
because they don't want to pay that.
Well,
Yeah.
what typically happens in markets when it's less affordable because of interest rate hikes, homes don't necessarily go down in value, but incomes eventually will start to catch up. Right now, we're in we have a lot of inflation, so your paycheck isn't going anywhere near the way it used to.
Well,
So-
I think I gave the statistic on one of our last ones. Over the last 10 years, the incomes in the U.S. have gone up 14%, and the prices of homes have gone up 148%, something like that.
And that's because the
Big
interest rates
difference.
have allowed that to happen. Thank you, Sue.
Yeah.
Sue, for putting keys.
Oh, thank you,
information
Sue.
in there.
Yeah,
Yep.
it's in our chat box. So the fact that I can flip hamburgers for $15 an hour, I mean, that's just one example of how ridiculous wages have gotten. How will that affect home prices? Because people are making more money. The rates are going to go up. We think they're going to go up.
Mhm.
So does it even make a difference?
No, because everything else is more expensive.
Yeah. The
And then
inflation's just
inflation-
If our true inflation is at 10% a year, $15 an hour is not helping you any.
yeah.
So they're going to have to work on the inflation piece, which means they're going to have to the Fed's going to have to stop buying bonds and
Mhm.
stop buying mortgages. And we certainly can't we need to slow down on all these additional programs, and you need to focus on the stuff that matters.
Well, what I think is
energy costs are going to drive a lot of this.
what I think is really interesting about all that, though, too, is the new money that's in the market, the non-qualifying loans that are out there. They are a fabulous option, whether you're an investor or not.
Mhm.
You can qualify in the 4% range.
Yeah.
Right now for, if you have 20% saved, which many people who are buying houses do, most of the loans most of them are written down 20%. You can qualify for these. You don't have to show your tax returns. You don't really have to show anything but bank statements and have a good credit score. I think these non-qualifying lenders are going to really put a hurting on conventional lending.
Yeah.
And give them a run for their money. I'm really anxious to see how that will maintain our market, because they have made purchasing easy and affordable for so many people.
And how depending on who is the power in government at the time, are they going to start trying to regulate those folks?
That's my biggest fear. That's my biggest fear, is that they're going to stick their nose in it.
Yeah.
Because they're not getting anything out of it right now. So they're going to have to stick their nose in it and make a change, because, nobody is smart enough to do these loans without the government telling them that's good or bad.
Before we get to the end and have to wrap this up, I did want to do a
Song and
a
dance.
cheap self-promotion. We are doing long-term refinances and purchase loans for rental properties.
We have
now.
those non-qualifying loans.
And so
Even for
I think-
short-term rentals
yeah,
coming
we were
out.
gonna-
I was going to say, yeah, for 2022, we will start doing 30-year fixed mortgages on short-term rentals.
Tell all your friends.
Yeah, so we've been exclusively on long-term leases, and starting in 2022, we will open that up to short-term rentals and
Very affordable rates.
yeah, so rates, again starting in the fours. So
Yeah.
Yeah,
Woo-hoo. So excited.
And those of you who are invested in our main fund, do not worry. This is not a program that affects that fund at
Yeah,
all.
that's right. It only enhances it actually.
Um,
Because most of the people that are getting these long-term loans are coming into and doing the fix and flip and then just flipping them right over into a long-term. So we're able to
Awesome.
keep them
mhm.
as continued borrowers.
all
It's
right,
great.
folks, have a wonderful and happy new year. I know it didn't sound like it coming out of my mouth, but we are very excited about
Billy
next
is-
year.
Give us your
he's a
best excited.
monotone.
Yay. I'm not real big in showing emotion.
He never has been. I can verify that.
I'm
I've been
very
his sister
cool.
all his life.
Very cool, calm, and collected, unless I'm in my car.
Yeah, and
Unless
then
you're
he's
driving,
driving
yeah.
and then get out of his way.
Mhm.
You people stop going so slow.
That's right.
Pay attention to what you're doing.
Too funny.
Oh, that was another thing with our parents. My dad was in the back of the car the other day, and he's hollering at me to pay attention to what I'm doing.
63 years old. He still can't drive.
All right, folks. Like I said, have a happy new year. Thank you so much for joining us on the Real Estate Investor Show. We are
Carolina
yeah,
Capital
I'm getting
Management.
there. We are Carolina Capital Management, and we are lenders in the Southeast for real estate investors. If you're interested in borrowing money, go to carolinahardmoney.com and click on the Apply Now tab. If you're a passive investor looking for passive returns, click on the Accredited Investor tab. Don't forget to like, share, subscribe, hit the bell, and sign up with Wednesdays with Wendy. Don't forget about our 1 o'clock show coming up at, guess what? 1 o'clock.
Happy New Year, Sarah, Kong,
Yeah, Happy New
Sue,
Year's, guys.
Peter, Janice. It's so good to see you guys. Thank you for responding and talking with us. And I believe I saw, was it Danny Manning up there in the beginning and
Yeah, I think
David
so.
Smith?
Mhm.
Thank you so much.
Yep.
We really appreciate it.
All right. Take care, folks. All right. Bye.